talking about IPOs because they're so misunderstood and there's such an easy way to make money on IPOs if you're patient. IPOs are generally not made to make the retail investor rich. They're made to make the insiders rich. Now, some people are going to disagree with me because if I take a look at Circle's IPO, since it came out at $31 a share and it peaked at almost 300. That's a 700% gain on your IPO if you're buying it here, which you can make that play. That's fine. A lot of IPOs would do that where they have this huge, but now this is what starts happening. You find your peak, whatever that may be, and you never know, in that first couple weeks, what that's going to be. It could be 100%. It could be 200%. It could only be 40%. Circle is obviously taken off or has 700%. If you were in on this, good for you. But I'm going to teach you an easier way to play IPOs just as in general. Circle is going to be a very good example of this, but this pretty much works with any IPO that's out there, at least something that's not 100% complete crap, a SPAC or something like that. I'm looking at you, Virgin Galactic. There's so much hype that gets put into these IPOs. You have the issuing bank pumping it up. Obviously, you have the media and things like that pumping it up. When it's something Circle where it's about crypto and stable coins and the media is just all over it, I didn't expect a 700% gain, but you're going to expect a pretty decent gain. Now, you can go for that, or you can just be a little patient, because here's the thing that most IPOs go through, and I'm talking 60, 70, probably even as much as 80% of IPOs will fall below their initial IPO price within 3 to 6 months. Okay, history just shows this so many different times. 98, 80, 50%. You always have a couple of things that are going to work against you when you're buying an IPO right out the gate. Now, I'm talking to long-term investors here. I'm not talking to the guys who are going to trade the bump and then sell and cash out and do all that. To me, that's a lot of stress. I don't really want to do that. I'd rather just play a pattern that most IPOs have that is fairly certain is going to make me money. Okay. So when you're looking at IPOs, you typically get this initial bump and then a drop. And the reason being is because insiders are cashing out. Okay. And I'm not talking about the employees of the firm. I'm not talking about lockup periods. Lockup periods happen usually anywhere between 60 days and 6 months after the IPO is issued. So the lockup period is when the CEO can't sell, the employees can't sell. They have to wait a certain period of time after the IPO is issued before they can start selling their shares. That comes later. What happens in the beginning is the insiders and the venture capitalists cashing out. All the people that funded this money or funded this startup in the beginning, they're like, now's my payday. Because they don't get to that point unless it goes IPO. These guys could have been waiting for years for this to happen. So that's reason number one why it begins to trail off, is because insiders and VCs are cashing out. And there's also a lot of overhype. There's always a lot of overhype, especially in this particular space in crypto. You're going to see an overhype. Then you have the retail investor, which is the FOMO, which probably some of you will probably read this, where you're trading in and out, or you held it for a day or two and then you're getting out and there's all this activity going on. That's another piece, is that people, just the traders, not the long-term investors that actually believe in the company, but the traders. That's when you start to see big cash outs. Don't worry about this hump here. You don't want to buy in at that because it's still coming. And the other reason is, and this isn't going to come, I'll have to check to see when the lockup period for Circle is, but the lockup period is weeks away from coming out, where all the employees, the CEO, stuff like that. And it's not that they're going to cash out all of their shares, but you're going to have a cluster of people that are cashing in generally a fair amount of shares to just spread their wealth around, to diversify away from the company stock, which is a smart idea. And the thing is, most IPOs follow this pattern. And I'm going to give a really good example of Facebook. When Facebook first IPO'd, it was around $30 or $27, something like that. It could be a little bit off on those figures. Pretty much every IPO does this, where within a couple months, it's trading below the IPO price. When you're in June, you're in July, you're in August in Facebook, you're picking it up for $17 a share, $18 a share, $19 a share. And it tends to stay at that level for a month or two. It's not something where it's a V where it just shoots right back up. It tends to stay at that level. So you could be buying it, sure, back in May at $30 a share, and maybe it pops up a little bit, but then it's going to tank because insts are typically selling out their shares because of that lockup period is coming out. Meta is a really good example because everybody knew Meta was going to be a multi-billion-dollar company, and it still had that behavior. You can look at other ones like Instacart, if I could find them. Yeah. So take a look at Instacart's history. IPO back here, going as high as 33 and a little bit higher than that. But then you have this amazing tank that just happens. And this is a behavior that IPOs have across the board. It's not unique to every IPO, but the majority of them, 60, 70% that I've seen, typically do this. You had something that was going for $33 that you are now buying for 30% off. And it's usually it trends in this low period for quite a while. You have plenty of time to save money, get cash together, buy these shares. You don't need to do it on this one day on a Tuesday where it tanked and then you missed it. You generally have time to get money together to buy these because eventually this swing happens. But you got to get through the first 3 to 6 months, 9 months easily. Otherwise you get this. Look at this. It goes all the way down to 23, 22. It's a huge deal. And then you buy it, then you can cash out at that point. But for the most part, most IPOs follow this pattern. You look at Rivian, pretty bad example because it hasn't rebounded yet. Again, the IPO starts way up here, then tanks, goes below the initial IPO price. It's just a pattern that happens time and time again. Look at Robinhood, another really good example. Again, IPO, you get a huge peak, then a crash. Happens typically between 3 to 9 months. And again, you've got a long time to get cash together, completely falling below the IPO price. I'm not going to go over into all the SPACs that did this, Virgin Galactic, Chamis garbage that he was pitching. But this is just a typical behavior of IPOs. It's not unusual for this to happen, even if it's a great IPO. Doximity is a great company to own, still falls victim to that pattern. Debuts is at 35, reached 40, 50 very quickly, doubled, then a drop. And this wasn't just because of the post-COVID hype, it's just a feature of IPOs. When looking at an overall play, my recommendation, or at least what I do, is I wait for the hype to be over with. Because 10 to 1, that hype, unless I'm going to sell it at some point, isn't going to make me any money. I'd rather wait for the crash after the IPO. And the crash is coming. There's a 70% chance, it really doesn't matter what IPO it is, that is going to happen. If you can just wait, it's at least 3 months, usually closer to 6 to 9. It's generally going to fall below that IPO price. I'll do an update once Circle does because I don't see why it won't. Just because it's completely off the charts as far as valuations and things like that. A couple of days ago, the PE ratio is 2,200. You see something like that for a company that really doesn't generate any revenue, it's probably going to tank. It's already down almost 50% from its high. So, I mean, it's got another $30 to go, and it's going to go down 50% from its high at 298. It just has to hit 150. That's pretty much a given. If you want to short it, you can. But that is a common behavior with all IPOs. I shouldn't say all IPOs, but the majority of them. So that's a tactic, in my personal opinion, it is much easier to make money on that if you wait for that flat line period. It's going to stay there for quite a while. Usually it's at least a month. It can be a year. But if you're buying it there, you have a much better chance of doubling or tripling your money than trying to get that initial pop when it comes out, missing the cash out because it's going up 50, 60, 70%, 700% Circle. You know, even if you made 100% and it went up 700%, you're just, oh man, I missed 600%. I could have been rich. You start playing all these mental games with you. But look at that pattern, see how it works for you.